Good evening, everybody. Sorry about that. All right, we're going to do a kind of our presentation on the T-line because we get probably about 6 or 8 inquiries at least every day saying, what is the T-line? So, and this will be a good review for some of the people who've been around for a while. So we'll kind of go through what the T-line is. But before I do that, I am going to be on the road for a little bit. On September 19th, I'm going to be in the Washington, D.C. area. So if you're in that area, I guess we're doing a presentation for Metastock. Feel free to come and join that. Then I think that's on the 19th. On the 20th, which is a Sunday, I'll be in Philadelphia. So if you're in that area, come and join us. On October 17th and 18th, I will be in Las Vegas. They want me to, I guess, speak at the trade show. And so if you're out there, um, Alex, so if you're in that area, come join us. Be glad to have some mint and juleps with everybody. So anyways, the T-line is basically the 8 exponential moving average. And it works very effectively with candlesticks. Basically, if you're looking at a chart, most of the charts that you're going to see have a 200 simple moving average, a 50-day simple moving average, and a 20-day simple moving average. And the reason for that is every major money manager in the world uses those moving averages to make their decisions about their portfolio. The T-line is the 8 exponential moving average. We call it the T-line, short for trigger line. I hope everybody's having. Oh, Barbara, I guess there's some sort of trade show, investment trade show in Las Vegas on the 17th and 18th of October. Somebody might have to help Mike get some sound. So these moving averages act as magnets because everybody's waiting to see what's going to happen at a support or a resistance level that everybody's watching. The T-line, nobody has those on their charts. So what it boils down to is if the candlestick signals are the graphic depiction of what's going on in investor sentiment, then if you add the T-line, which is somewhat like a Fibonacci number, I guess I've got it down here further, that you add those two, which are natural support and resistance level, you've got a very powerful combination. So the T-line has one very simple analytical function, that the T-line works on any time frames, whether you're working at a daily chart or a 10-minute chart or a 1-minute chart. The T-line on here is the black line. So again, they work on all time frames, whether you're trading off the 5-minute charts, the 10-minute charts, the 1-minute chart, the monthly chart. So if you look at the patterns on a 10-minute chart of the Dow, if you're trading the YMs, got the same patterns: wedges, breakouts. So it works just as effectively if you're trading intradays, if you are trading swing trading or long-term investing. So again, the T-line kind of has Fibonacci characteristics. It's a natural support and resistance level for human nature. So there's a very simple rule. If you see a candlestick buy signal and a close above the T-line, you can stay long until you see that candlestick sell signal and a close back below the T-line. Now this is part of the aspects of candlesticks that have helped me tremendously. I always tell people I was the worst investor in the world. I was the person that was panic selling at the bottom and buying exuberantly at the top. And if I did have a profitable trade, which was rare, I wouldn't want to sell because, boy, would I look stupid if they got me out and then they turned around and took off again. Well, now I know using the T-line And I don't have the answer to that, and I'm afraid to answer that. And now I know that if I come out of a trade when it's time to come out, I can always get back in when it's time to get back in, get back out when it's time to get back out. So I lose that emotional tug of war where I don't want to take profits because what if this is the Dell of my lifetime, and after I sell it, it just skyrockets. Now I know when to buy and when to sell. Conversely, if I'm going short, if you see a sell signal and a close below the T line, you can stay short until you see that candlestick buy signal and a close back up above the T line. So this helps tremendously when you're doing trend analysis. If we can see, based upon our gap up and our 45-degree, that all we have to do is stay long until we see that sell signal and a close below the T line. That tells you there's been a change of investor sentiment, and it's confirming the sell signals. Also makes Federico, the T line is the 8 exponential moving average. You can put those on your charts just like you would on any other moving average. And this is recorded, yes. So makes it very simple. If I see a resistance level and a sell signal and they gap it down back below the T line, it tells me not only have they failed the resistance level, but they're now in a downtrend. I can stay short until I see that buy signal and a close back up above the T line. Then there's some very simple truisms using the T line. And basically, remember we just said if it closes above the T line, you can stay long until you see a close back up above the T line. Our buy recommendations are usually that you want to see a candlestick buy signal and a close above the T line. No, the T line is this black line, right here, the 8 exponential. The blue line is your 50-day simple moving average. Your red line is your 200-day simple moving average. This works on everything, Dennis, whether you're trading stocks, bonds, commodities, currencies, tulip bulbs, anything that has fear and greed in it. What if the candlestick moves up and down the T line? Does that create false signals? No. Basically, what that's telling you is it doesn't know which way it wants to go, so it's indecisive. And you're going to be able to see that on the chart, that you've got an indecisive chart. Close out the position and go on to something where you can see where the probabilities are in your favor. What is the green? The little green line is the 3T line, which we'll comment on right now. The further away you move from the T line, the higher the probability it's going to move back to the T line. So this adds additional credibility to your buy signal. That if you see a buy signal in the oversold condition and you're that far away from the T line, your first target is likely going to be back up to the T line. So that means the worst case scenario, you're buying and it gets up to the T line and fails, at least you're going to come out with a flat or at least a small profit on a bad trade. It just puts the probabilities in your favor that you're in the right place at the right time. The T line is the 8 exponential moving average. How to use the 3T line and the T line. Again, the further away you move from the T line, the more credibility is built into the 3T line, that you start watching that to see if things come back up through that level. Stochastics are 12-3-3, and that's nothing set in stone. Just I sat for a night probably about 30 years ago and said, all right, what's stochastics peak out when the stock peaks out, and what's bottoms out when the bottoms hit? Do you trade T-line without candlestick signals? No. I trade everything. I trade candlestick signals and I add everything else to it. Yes, you want to see a candlestick sell signal and a close below the T-line to come out of a position. Or you want to see if you're close to the T-line you want to see that buy signal and a close above the T-line. But if you're far away from the T-line and you see that buy signal, you know as soon as it, remember the signals are the first criteria for buying or selling. The T-line just happens to be a very good confirmation spot. Slow stochastics. So anytime I see something move that far away from the T-line and the 3T line, I can be buying on the next set of buy signals. That's where the 3T line becomes more relevant. And then I'll watch to see what happens once it gets back to the T line. So the T line is just a very good confirmation of what's going on in investor sentiment. If you start moving too far away from the T line on the upside, you start seeing potential sell signals, you start closing out immediately on the confirmation of those sell signals because where's the likely target? Back to the T line. And so if we know what our other patterns are, like the J-hook pattern, we can always buy back when we see a J-hook pattern setting up. On the other hand, why risk it? We know it's probably going to come back here, and it may continue on down. Take your profits. You can always buy back on the next buy signal. 3T line is the 3 exponential moving average. And then we also have what we call the T-line crunch, which is very effective. Notice how the T-line, when they hit a resistance level, well, this is what we kind of call the bobble. The bobble is when it hits a resistance level, comes back and bobbles back down to the T-line. And notice what they couldn't do at the T-line. They couldn't close it below the T-line, which means now the T-line crunch is pushing this right back up. So if I'm taking profits in here, I'm buying right back here because it tells me not only aren't they closing below the T-line, but the T-line's pushing everything up through the resistance level. And what type of pattern will I have? A wave 1, wave 2, wave 3 J-hook pattern. So the bobble is, as soon as you see it hit a resistance level and pulls back, you can start taking profits. But if you can see that they aren't closing below, watch for the T-line crunch. If they come back up through this level, that means this resistance level has now disappeared. They're going to target the next resistance level. I don't know what SCT matter in case of bobble. Oh, stochastics. Stochastics, no, usually your stochastics are also going to be doing kind of a J-hook pattern setup. So notice what we had on this chart. We had a left-right combo down here, a very strong reversal signal. Came up, hit the first resistance level, and there was your first bobble. And then it came back up through the 50, went to the next target. Hit the target, there was your bobble. So if I'm getting out here, I'm buying back here when I see that they're still taking it up through the resistance level. So if I'm taking profits at these places and buying back higher, at least I know when I'm buying back higher, the price move is moving in my direction. I often iterate that if this is a 10-point move and I only get 8 points of it because I closed out when it was time to close out and bought back in, that doesn't bother me in the least. The higher my correct trade ratio is, the higher my compounding effect is going to be. Do you have the steps to check which line first, then stochastics? Do you have steps to check which line first? Row, you're going to have to rephrase that. Check which line first. My first criteria is the 8 EMA and 3T line. No, the 3T line is a 3 exponential moving average. It moves even faster than the T line. So that becomes very useful in some of our strong patterns, like the fry pan bottom. If I'm buying right here on the breakout, I've got one very simple criteria. I just stay long until I see a sell signal and a close back below the T line. However, look what happened up here. Remember our simple rule. The further away you move from the T line and the 3T line, the higher the probability it's going to come back and test it. So is it time to take profits here or here? That's where when I start moving too far away from the T line, knowing there's probably going to be a pullback, I just flip to my 10-minute chart. My 10-minute chart on that first day was telling me I was all right. Second day started up and then came back through the T line. I went ahead and took profits. Because where was it trading? Well up in the overbought condition on the daily chart, and now it's coming back through the 10-minute chart. Then it turned right around and came back up through the 10-minute T line, buy back in. Why would you buy a stock that's dramatically overbought? Because what do we expect coming out of a fry pan bottom? A very big price move. So the 10-minute chart would have gotten me back in the position and made more profits until the next day when it opened lower. So the T-line works on all time frames. And again, this is where the 3T line becomes effective. If you not only moving away from the T line, you start moving away from the 3T line, that tells you you're well overstretched. Start looking for a sell signal. So trend analysis, refinements, basically it boils down to we can analyze what the market trend is doing based upon the signals and what it is doing at the T line. Was this a bobble up in a downtrend? Well, when they came up above the T line on the Dow, that told us it was time to, this is a current chart of the Dow. Same scenario on the transportations. If we can see the transportations did a buy signal or trading positive, that tells us this market's not backing off. So once we see a buy signal, we can pretty much assume we're in an uptrend until we see a sell signal and a close below the T line. We can take profits, and we can always buy back if we see that the trend is resuming until the next buy signal. We take profits again. It also allows us to analyze more clearly what's happening when you have trend channels going on. If you can see there's a channel forming, we saw a bottom here. We saw our big Morningstar signal here at the same bottom and on the 200-day moving average. Now where is it coming back up to? The resistance level. However, notice what's happening on our with our T line. They aren't closing it back below the T line. That tells us there might be something different in this trend, which means they could be breaking through. So when we start watching the trend very closely, if we've got a T line crunch going through that resistance level, that tells us we want to stay long and probably even be adding more long positions, because now they're breaking through that major resistance level. I don't know what this was. Taking profits. Notice how it came back up above the T line, doing our J-hook pattern. Just tells us when to get back into a trade. If I've got a long-term, long-term in this case, a month and a half uptrend, and then we have a big evening star signal and a close below the T line, that tells me there's a new psychology in this trend. It's time to get out. Sandra, the 3T line is this little green line. It's the 3 exponential moving average. And we can do a session on that alone sometime, where we use the combination of the T line and the 3T line to kind of refine your entry and exit strategies. You have referred to the sell signal several times. Would you clarify what defines? There's, Jerry, if you read either book, there's 12 major signals. 6 of them are buy signals and 6 of them are sell signals. And remember, these are signals and patterns that the Japanese rice traders identified over 400 years to tell you what was going on in human emotions. So this one's an evening star signal, opposite of your morning star signal. A big up day, a day of indecision, and the third day closes more than halfway down that candle. That's an evening star signal. That tells you there's been a change of investor sentiment. How about Bill? I don't know what the question is, but this chart right here could be a 1-minute chart. It could be a 10-minute chart, a 60-minute chart, or a monthly chart. They all look exactly the same. All depends on what time frame you want to be trading. I'll get to a J-hook pattern, Todd. How do you screen the stocks for candidates? Very simple. That's a whole nother session, Rick. If you basically each signal has a formula that you can, if you can say the or describe the signal in words, you can write the formula very simply. And so each day when you refresh your charts, or even during the day when you refresh your charts, the charts are automatically going to come up with the signals and patterns that you're looking for. So it's very easy. And I can remember back in the good old days before I had the chart scanning process. Oh, I was in Houston, Texas, and I was SOS trading. That was that quick day trading just as the electronic trading came out. And I would go over to the building where all the computers were on Saturdays, where there was no air conditioning, in the summertime in Houston, Texas. So after I took off my shirt and my shoes, it wasn't a pretty picture, but I would sit there for 5 or 6 hours going through all the charts, looking for the different patterns. Now I can do that same process in approximately 5 to 7 minutes after the close each day. Here to comment on trailing stops. Yes, very simple. If I'm long, I just have a very simple exit strategy. I'm going to close it out if I see a sell signal and a close back below the T line. If I'm already in an uptrend and well up in the overbought area, usually it's if I'm way away from the T line, I use the previous day's open. The price should not come back down through that level. And that's a whole other session that we'll do. We do in the members area on a Tuesday or Wednesday night, how to set your stop losses. And it's very simple with candlesticks. I usually use the illustration that every major money manager tells you to cut your losses short and let your profits run. And in the 40 some odd years that I've been investing, I've never heard a single one of them tell you how you cut your losses short and let your profits run. It's very simple when you use candlestick signals and patterns. It's there's spots that tell you when that pattern has been broken. Stephen, yes, this is being recorded. Okay, John, all right, just send me part of that money, all right? Christmas checks, that sort of thing. The trend direction of the T-line is a very powerful signal too. Good for scans. Yes, you can add them to your scans. Will you still go long if below the 200 SMA? Yes. Yes, the moving averages are just moving averages. The signals are telling you what's actually going on in investor sentiment. So if you're way below the 200-day moving average and you see a buy signal, more than likely they're now heading back up to the 200-day moving average. The moving averages just act as support and resistance. There's a lot of money managers say, oh, you don't buy unless you're above the 50 or above the 200. They can trade their way if they want. If I see a candlestick buy signal, I'm looking for it to be way away from the moving averages because I know that my next targets is back up to the moving averages. Now I forgot where I was. Up here. So very simple. Buy signal, take profits, get back in, take profits, get back in, take profits, get back in. When it comes back up, it hasn't come back up. This was Kroger a while back. So even on the big price moves, it helps you decide when to get in. In this case, whether this is a 10-minute chart or a daily chart, if you see a big reversal signal, there's our big morning star signal, you can stay long. Now, there are days like this. Notice where I've got a question mark that we did close below the T-line. So what's my next criteria? If it opens lower and starts trading lower, I'm closing it out. But why would I give it an extra day? Because notice what the trend has been. All during this time, this has been an uptrend. So the T-line's been acting as a very strong support. I'll give it one more day, but it better open positive and trade positive to tell me the uptrend is still in progress. Or if I see a big move on the initial opening of a stock, I want to see whether this is a big gap and crap type trade, well, the fact that they really couldn't bring it back at all told you that buyers were still there at the high end of the trading range that day is usually going to create a very strong signal by the end of the day for further upside. Once you see a signal, if it does not close above the T-line within a certain number of days, how does that negate the signal? Yes. If I'm relatively close, and I'll see if I can find one. If I'm relatively close to the T-line, notice in this case it was a buy signal and a good distance away from the T-line. But had this signal occurred right up in here, right near the T-line, then I'll take that. I would rather pay up a little bit more knowing that it got up above the T-line. But if after a buy signal, let's say this opened lower the next day and then traded flat the next day and then traded flat the next day, if I got in it for some reason, I'm back out because that's telling me they aren't staying up above the T-line. There's just one very simple analysis that you can use with the T-line. If you're trading above the T-line, the probabilities are extremely strong that you're going to stay in an uptrend. If you're trading below the T-line, the probabilities are pretty strong you're going to be in a downtrend. So anytime I see my buy signal and it gets negated by closing back below the T-line, I know the probabilities are against me. I close out the position. My worst case scenario is it turns around and closes back up above the T-line. I can always buy back. Sean, I'll have to pull up that one later. But that's also analyzing what the market conditions are. Now, there are market conditions that tell us we don't want to be long or short, or if we're in the market, we probably want to be as long as we are short. So there's going to be, not only does the candlestick signals and patterns tell you what the trend is doing and which way it's going, it's also going to show you when there is no trend and it's not going anywhere. And the whole point of using charts, especially candlestick charts, is, excuse me, it shows you which direction you have a high probability of a price moving. And if you can't analyze that chart and see which way things are moving, then you shouldn't be in anything, or you shouldn't be in that chart, because it's not putting you, giving you, it's not allowing you to have any advantage of being in one direction or another. Oh, Canal, that's up to you. Depends. Each person has their own trading style. If you can't be sitting in front of the screen all day, or let's say you're working someplace and you can only get to the screen 2 or 3 times a day or once a day, you have to formulate the best trading program that's going to be good for you. Obviously, you can't day trade if you can't sit in front of the screen. So I'm a swing trader. Most of my positions last anywhere from 2 to 10 trading days, and I'm usually making my decisions based upon what the daily charts are doing. If I'm trading intraday, I'm probably using the 10-minute chart. We did that one. So anytime I see a big move, like an announcement, I want to see what the results of that announcement is, and if they continue to take it right on up, I can stay long. If all of a sudden it reverses and comes back down, I want to be back out of that trade. How do you handle the flash crash day we had? I handled it very well, Bob. I made tons of money being short because that's what the market was telling us. We knew that market, and I'll get to that here in a minute when we get to the live charts. We knew that was coming, or that's what we suspected was coming, because that was coming out of a dumpling top in the Dow, but I'll get to that in a little bit. Let's see. So anytime I see a gap up in the morning, everybody's afraid of that gap and crap, but if I can see but they're still trading above the T-line, that tells me this gap up was strength. There was some profit taking, but not anything severe. You just hang on for the rest of the day. So anytime I've got a position, once again, moving too far away from the T-line. Remember, we want to sell based on a sell signal, except for the fact that if we're way up here, look how far away we are from the T-line, and look at the profits we have. We don't want to give back a good percentage of our profits. That's where we flip to the 10-minute chart. Say, all right, I'm starting to see a shooting star. This is my 10-minute chart. Notice my 10-minute chart has a T-line and the 3T line also. Came back down to the T line. Now they're trading back down below the T line on the 10-minute chart. And where do I know I am on my daily chart? I know I'm way up here, that far away from the T line as well as that far away from the 3T line. I can now be taking profits up in this area. What's the worst case scenario? Comes down, hits the 10-minute chart and heads back up, or trades down here and starts trading back up, I can always buy back in. If I want to be a little bit more nimble, when I see the 10-minute chart starting to turn over, I watch my 5-minute chart. If my 5-minute chart can't hold on the T line, I know I've got to watch my 10-minute chart more closely. And if the 5-minute chart keeps heading down, it tells me the 10-minute chart is going to keep heading down. I come out of the position. Jim, I will get down to a 1-minute chart. If I've got something that is really up in the air or way down in the bottom, and I can see the 5-minute chart and the 10-minute chart are setting up, then I'll watch my 1-minute chart for my final execution, because I know based upon what the 1-minute chart is doing, what that's doing to the 5-minute chart and the 10-minute chart. But now not sure the uptake is indicating which way the market is going. Yes, we'll get to the live charts here in a little bit. First of all, I just want to get everybody introduced to the 10-minute or to the T-line. You use a 60-minute chart and T-line for short term. I usually don't use a 60-minute, but that's all depends on what you're trading and what type of, how fast you want to trade. I'm usually trading off the 10-minute chart and the daily chart. I want to see what my daily chart is doing, and then I'll trade off the 10-minute chart. Some people will trade off the 5-minute and 60-minute. It all depends on how fast you're trading. Some people will use the 60-minute and the weekly chart for longer term holds. Just depends on what combination you want to be trading. So if I have a day like this where I see something break out, we know this is our best pattern. Notice the T-line crunch and the Dogee gap up. That's our best friend. But should we be buying here? Or should we be buying here? Or should we be buying here? Don't know. But if I can flip to my 10-minute chart, say, I can be buying here because if you cut the chart off right here, it tells me they're taking it up. If I looked at the chart right about here, I said, no, I don't want to be buying. They're backing it off. But right here tells me the 10-minute chart is holding up. I can be buying here, or I can be buying here, or I can be buying here. I might not buy right here, waiting to see whether it's going to hold the T-line or not. So it just gives me more insight as to how strong that move is going to be. And if I'm buying right here, does that mean sometime during the day it could be turning over? Could be, but my analysis right now is they've gapped it up and they're taking it up strong. I'm buying with at least the probabilities at that particular moment, saying you can still be buying that position. Sometimes, yeah, there's not a lot of strength in a stock until notice again. There's our T-line crunch. I think this is off a 10-minute chart of something. As soon as they broke through there, that told me I could be buying this. A new dynamic was coming in. So a lot of times near the end of the day, I'm trying to see what this is, soybeans or apple or anything that's traded a lot will hit a resistance level and start popping. And we can see that a lot more clearly when using the candlestick charts. If we see something big move, and we can see that on the pullback, they can't even close below the 3T line, let alone the T. That tells us our uptrend is still going to be relatively strong because there's no weakness coming into it. Let's see. I'll get to everybody's charts. I've only got a few more charts to go, and I will. So on that big price move, It tells me when to get in, tells me when to start getting out. Look how far away we were from the T line. And then it tells me when to get back in. This is your J-hook pattern. J-hook looks like a J-hook, up, down, and kind of a J-hook back up again. And usually wave 3 is equivalent to wave 1. So even if you miss this move, you've got high probabilities that this move is going to be the same. So you can be jumping in at that time, even though if you missed the first move. You can analyze the overall market trend based upon where it is in the T line. You can see which stocks are trading not only from a resistance level, but notice U.S. Steel not too long ago did a kicker signal down through the T line, off the 50, and now is rolling over on a various J-hook pattern, still more downside. So usually at the end of these sessions, we give a very great bonus that is beneficial to everybody. Today you're lucky. There is no beneficial bonus. That was just education. Let me see what else we got here. All right, Jim, I'm going to turn off the projector. I'll keep talking while I'm setting everything up. And we'll pull up the live charts. No, I just did that. Pull up the live charts. Kicker signal, I'll find one. Okay, part of trend analysis also includes knowing what the signals are telling us. Remember, there's only about 6 bullish signals. Actually, there's 50 or 60 signals in the candlestick universe. But when I first started learning candlestick signals, I wanted to learn every single one of them because I wanted to know every time it was time to buy. I've not been using kicker on Yahoo. All right, take a look at that one. Thank you, Jam. I wanted to learn every single signal I could, but then as I kept going through the charts, I found out there's only about 12 that you really need to know because they are going to be the ones that are going to be the major signals that occur 99.99% of the time, and the other ones, even if they do occur, aren't probably going to be as strong as a major signal at some point. All right, so we had a reversal. There was our inverted hammer, which is one of the major signals in the Dow. Now, somebody was asking, how do you handle these type of flash crashes? We handled it very well. We started shorting based upon the dumpling top, and the dumpling top is the opposite of the fry pan bottom. It's a big rounding top. And remember, all summer I kept saying, go fishing, because there wasn't enough in this market to get your teeth into, because it would be up a couple of days. They even had trends where it up one day, down the next day, up one day, down the next day. It just was not a good trading market. However, the alert was that a dumpling top is usually a slow rounding top that you can't trade one way or the other. It's just junky trading. And that's what was being identified, that this big rounding top was about ready to alert us for a big downdraft. So right in here, we started shorting things and got down here, and the market was down 800 points on this day. So what do you have to assume? First of all, you have to assume that they've moved from here down here in one day, down 800 points on this day, and notice how far away you are from the T-line. So on the open, with the market down this much and all those stocks down big, we started covering the short positions and started getting ready to go long. So over the last couple of days, it's been bouncing around, but it's been indecisive. It was up strong 2 days ago and then closed lower, then came back up again. So it wasn't up and then down. It was up and down all day long in both of these trading days. But what was the kind of final confirmation? Final confirmation day was that they closed above the T line on the Dow. So we made good money here, and we started picking up discounted prices and going back long, and we'll get to some of these. You watch the long wicks in that case? Well, the long wicks you can't watch. In this case, we know an inverted hammer tells you that if they open positive the next day and start trading positive, but the probabilities of an uptrend after an inverted hammer is extremely strong, like 95% probability or greater. And there's a very simple stop loss. If we know that statistic, or if you take my word for it that that statistic is true, then the other side is true also. But if this should be going up, it shouldn't come back through this level. If it started up and came back down here, we're still in a downtrend. That inverted hammer didn't work. But an extremely high percent of the time, like 95% chance or greater, you're going to be in an uptrend. Let's see. Can you use 5-minute charts using these signals, or do your systems work best? Oh, on any chart. This is your this is the Dow daily. This is the Dow on a 5-minute chart. And notice that they look exactly the same. This is the Dow on a 1-minute chart. Same signals, same patterns. This is the Dow on a 10-minute chart. There's your little J-hook scoop pattern going into the close. So, oops, we're on that 10-minute chart. When you say Dogee sandwich, do you mean a Dogee sandwich between two same colored candles, or a candle sandwich between, or a candle sandwich? No, a big up day, I'll find a Dogee sandwich. I've got them in here. You have a big up day, then you have a Dogee sandwiched in between the next big up day. All right, so the NASDAQ had more clarification in the fact that they had the kind of the belt hold signal, still kind of iffy in here, but the fact that they gapped it up today at the T line and went positive by the end of the day, I started covering my shorts when the market was down big, when the Dow was down 800, and most of the stocks were gapping way down. I started covering the shorts as soon as I saw, let me get to one. Made a lot of money on the short, or on the puts on Apple. So it's very simple. If we saw, where do most people sell? They panic sell at the bottom. So Apple was down here and it was trading in this direction, which is good if you're short. But as soon as it turns around and comes back up through where they opened it, what type of candle is it forming? You can start seeing the green. That tells you the buyers have come in. So on the 10-minute chart, if I can find it, on the 10-minute chart, did the same thing, opened here and started coming back up. So when it started coming back up, I flipped to my 5-minute chart. I don't know. My 5-minute chart did a big doji down here. So I started covering the positions, covering the short positions. Because what was my worst case scenario? Come up to the T lines on the intraday charts and fail, but they didn't. They kept right on going. After that, you could trade intraday on them, but started taking profits down here after, I don't know, 3 or 4 days of big downside moves. And I forget what day that was. I can find out, can't I? What is today? Thursday, Wednesday, Tuesday, Monday morning. Remember, Friday afternoon, I was saying we are probably in for a Black Monday. DP, you can say what you want. My accounts tell me what I do. We covered our short positions down here. That's just logic. You've got a market or a stock that's already been down 20% in 4 days. When is it time to take profits? When the charts say it's time to take profits. Yeah, DB, you can do whatever you want to. You can listen to whatever you want to. I've been doing this long enough to, yeah, you can listen to anybody you want to. All right, so some of the other things that were moving big today. Crude oil. Crude oil didn't show us a reversal signal. It started trading up. So I didn't go after it very hard, but went after it off my 10-minute chart. I was in and out of it a couple times, but made very good money on crude oil today. So crude oil, what's it done? It's told us that they've broken this downtrending channel. I would suspect there's going to be some profit taken in the morning, but I'll watch to see if they come back down to the T-line. And then if they hit the T-line on the daily chart, then I'll flip to my 10-minute chart and see what type of move it's making. Let's see. The dollar. They've lost a day in here, but there's a big morning star signal on the dollar, bringing it back up, which means the euro euro on its way down after the bearish harami up here. So you could be shorting the euro, you could be buying the dollar. Gold. Nah, don't worry. Everybody has their own doubts. And it's not anything that we're making up after the fact. Everybody in the chat room saw that I was covering short positions on first thing Monday morning. So it's recorded. Gold, still backing off, but looks like it's trying to bounce in here. What numbers do you use to create the 3T line? Is the 3 exponential moving average. And I was short cattle the last couple of days, but closed it out down here because, again, notice how far away we were from the T line. Didn't go long until the positive open today, because what's our simple rule of a Dogee? It's going to move in the direction of how they open it after a Dogee. Stochastics in the oversold area. Started buying cattle today. And interest rates. Looks like bond prices are moving down, interest rates moving up. Except notice where we are. We're right on the 20, which is the bottom of this trend channel. Been in for 2 weeks. It feels like a lot more volatility when it's live. Is it? Or say do. D-Buck, the markets have been volatile. I mean, notice how involatile it was up here, then bam, and then bam. And these are big moves. That was an 800-point day. That was up 500 points at one time and backed off, so it was down 80. Then yesterday was back up 500 some odd points, and today was up 369. So this is volatile. But that's the advantage, again, of what the not knowing what the market's doing, we can see graphically what the market's doing. Oh, no, there's no rule of thumb, David. All we're looking for is, if we're that far away from the T-line, start looking for a reversal signal. It's probably going to come back up, but more than likely, if you see a reversal signal down here someplace, it's going to start coming back up. So I'm just alerted to the fact that this is time to start watching for buy signals. Oh, let's see, UVXY. Yeah, this one's been a toughie because of the volatility. Nice fry pan bottom breakout, slow curve breakout, big move, and again, this was the move that corresponded with the big downdraft in the market. Now, as you can see, it's whipsawing. So this one would be hard to trade. I'd be trading this one off the 10-minute chart. Debuck, it all depends. Yeah, once they find the direction in the market, usually it's got a trend to it. However, as I mentioned about the dumpling top, there wasn't anything that you could really get your hands on or sink your teeth into. It was just a lousy trading market over the summer, which is not unusual for the summer. But this dumpling top also told us two things. One, when you could see that it wasn't worthwhile trading, and then you could see that this dumpling top was trying to make profits in indecisive market conditions. But you could be ready for these market conditions, and that makes up a lot of time or a lot of money. So the market will usually move in a trend. Usually you can see there's our morning star signal. There's our uptrend until we see it close below the T-line. Then it started getting choppy where it's up, up, down, up, down. But this is the advantage, again, we have with candlesticks, is we can see when an uptrend is over based upon a close below the T-line or another support level. And a lot of people ask, why do you have the 20 on your charts? Usually it's the 200 and the 50 that everybody's watching. But if the market is in a steady move one way or the other, usually the 20 will become more prominent during the trend until they break the 20 and then they go to the next moving average. Yes, this is recorded. Let's see. Hold your individual ones until I get to the end. I'll get to most of them. Yes, and so this is the whole point of using candlestick charts, is to identify what is going to happen and be ready for it, and then take advantage of what is happening at the same time. All right. That was interest rates. I'm watching wheat. Wheat has got this little slow curve. I'll be ready to short wheat tomorrow because got a wave 1, wave 2, going into wave 3. And corn's less volatile, but you can buy more contracts of it. It's also got potentially, if it comes back down through this level, time to go short. Okay, some of the ones that we were buying today, based on VNR was our recommendation. Let's make this big enough where we can see it. Because this is your Dogee sandwich. A big day, a Dogee, and then there's a simple rule of a Dogee. The price is usually going to move in the direction how they open after a Dogee. So they opened up positive. That meant they were going positive, which meant this day right here was usually going to be the same magnitude as this day right here, which also meant they weren't going to resist at the T-line. And then today they popped it up more. The result of a Dogee sandwich is, even on a day trade, if you see it open positive, you can expect this type of move with a high degree of probability. And on a swing trade basis, you can tell that it's breaking this downtrending channel and the T-line. It's time to go long. This is a piercing signal. Yeah, it's enough of a signal to tell you that that's where the sellers stopped and the bulls stepped in. Your thoughts on the plunge protection team influencing the markets? I don't even know what the plunge protection team is, Charles. Oh, can you jump into VNR at this point? You can. Obviously, this was a better place to buy it, but right now, the prospects would be that it's coming back up to the 50-day moving average. EXEL, another good-looking chart where they've gapped it up. Notice a little scoop-type pattern, and observe the obvious. Where did they do the long-legged Dogee? Right off the 50-day moving average. Now they're back up above the T-line. After a Dogee sandwich, do you buy on the open or above the T-line? On this day, let's see. If I had been watching VNR, I would have been buying on the positive open with the anticipation that this day right here is going to be the same as this day right here. Worst case scenario is I buy based on that positive open, and it doesn't do anything, but I've still got buy signals, and I still got stochastics coming up. It might not do it that day. It might be the next couple of days, which is why we were buying both the stock and the calls on GMCR, because we had that big left-right combo, then a Dogee, then a positive open, but it didn't do anything of any great magnitude. But it did another Dogee day, and today it opened positive. So this is still in a good uptrend with the anticipation right now that your stochastic coming up. You had a big belt hold bullish engulfing left-right combo. That if they break through this level, or basically the 20, there's a big gap area they've got to fill, which makes your next target the 50-day moving average. Let's see. Oh, to the circuit breakers. All right. Your thoughts on the plunge protection team influencing? Nothing, Charles. Anything that is built into the market, whether it's mechanical or assumptions of what the Feds are going to do or what China is going to do or anything, is already built into the market. If you just relax and sit back and say that the charts are the cumulative knowledge of everybody buying and selling, then you understand what's going on. You don't have to analyze everything that's going on out there. Yes, but remember, those moving averages, yeah, on the 10-minute charts, they seem to work just as well. Jazz, I wasn't in that many positions. I was short a couple positions. I was short Apple. I was also short LXR as it was rolling over. And I was short I forget what other. Anyways, my small trading account, which I usually trade commodities and stocks, more than doubled over the past week based on these big moves. All right. I have the 12 major candlestick chart pattern links. MP, they're on the website. Go to candlestickforum.com, or they're in all the books, all 3 books. I know, had to short Apple, but figure you could always buy it back. All right, all right, some of the other ones that we recommended, PRTA this morning. Because this is remember the Dogee sandwich is a green candle, a Dogee, and a green candle. A bullish flutter kicker is a bearish candle, dark candle. Then they gap it up above the previous day's open and do a Dogee. And our simple rule of the Dogee, they move it in the direction of how they open it after a Dogee. They open it positive. So if you took out this little flutter, you basically have a kicker signal, which is your strongest signal. And notice how you got kind of that scoop pattern setting up. So right now we're still long this one with the anticipation we're in the next wave. On GM, CR, Elliott. Stochastics are turning over. I got my stochastics heading up, and I'm not trading off the 20. 20 hasn't been any relevancy in here. It's been the T line and the 50. So my next target is the next relevant next relevant resistance level, which is the 50-day moving average. All right, win. Still setting up. Notice how it's used the 50 a couple of times. This is common, that when you come up through a resistance level, come back and test it to see if it's acting as support. In this case, we can see immediately it was acting as support. Good place to buy. Put a buy stop at 703. If it comes up through there, your next target is going to be up here at the 200-day moving average. And so, again, we can identify which are the strongest signals. For example, David L. picked out ACI a few days ago. Notice the Dogee gap up, your best friend. That's the type of results you're going to get. And that's also seen in the these charts right now. A lot of the oils. There's your best friend, the Dogee gap up. Makes this very simple. This is BCEI. If this opens positive, what's it telling you? It's telling you it's confirming this very strong bullish signal, and it's telling you the T-line is not acting as resistance anymore. Where's your next likely target? The next resistance level, the 50-day moving average, a decent percentage move. NK, we put out 2 or 3 recommendations every day. We do trainings on the exit and entry strategies. We got videos on how to do that. And again, it's all very simple with candlesticks. Just simple logic. If we see a candlestick buy signal, where do we want to see it open the next day or trade the next day? We want to see it trading positive. If it opens down here, that's telling us the bulls aren't there. We don't want to be in it. When do we get in it? Well, if they open it down here and came back up through the close of the previous day, that's forming another bullish candle and telling me the bulls are still there. So just very, very simple, common sense. And that's the major element of candlesticks, is it's not anything where you have to learn formulas or numbers. Basically, it's just common sense put into a graphic depiction. Everything that you learn in candlesticks, you can sit there and say, yeah, I knew that. I just never looked at it in that way. Yeah, that's kind of a morning star on BCEI. Here's kind of a little kicker signal on CRZO. So all these oils, I know people in the chat room were going after BTU pretty strong. There's your big fry pan bottom. There's your breakout. Where's your next likely target? All the way up here. That's a good 150% profit. Don't you also look at the stochastics when ascertaining what the signal is telling you? Yes. But remember, the signals are going to usually occur when they're in the oversold condition. The patterns are usually going to break out when you're in the overbought condition, because that's the evidence of the exuberance now coming into that pattern. OAS, another best friend signal. And this is where what we call convergence analysis. Look where this signal is occurring. Stochastics down here in the oversold area. Your best friend Dogee gap up through the T line. And where did it occur? At the same place it bottomed out before. Notice what happened on this bottom over here. This was not a signal. This was just an up day and a downtrend. So that was a little bit more suspicious, or should have made you more suspicious, that this was not a reversal. This was just probably a pop, which it was. But now we've got more evidence that this is a reversal because they're bottoming out at the same level. You got a very strong buy signal. You're closing above the T line. Now you look for this target, which was the recent high. And if it breaks through there, you've got still a strong upside. And UWTI, which is the for crude oil, this is a good way to play crude on a more safe basis. There's your Dogee gap up. This could have a good move all the way back up to the 50-day moving average. This is the leverage fund. Again, hold off on your individual positions. I'll get to them when I tell Jim to do the double line. How do you tell the difference between up day and a downtrend? Oh, what was the last one we just did? Was it OAS? This was an up day and a downtrend because it wasn't a candlestick reversal signal. This is not a signal. This is just an up day. This is a signal. This is a Dogee followed by a gap up. You recommending long as long stay above the T line in a market, in a fast up and down market all year long? Very good question to answer. Very hard to make money long and short. Well, again, those were the previous conditions, Sam. I agree with you. It's hard to make money in these market conditions because there was nothing to get your teeth into. Now, all of a sudden, you've got a big reversal signal. I could probably go back here, and I can't remember when it was. There's a big reversal signal. That was the Dow for a few months after that. And there's other ones in the back, and I've got them on the static charts on the. But right now, remember, after big indecisive trading for the last 6 months, now you're starting to get some very decisive moves. So remember, prices do not move based upon fundamentals. Prices move based upon the perception of fundamentals. And all we're seeing right now is the graphic depiction of investor sentiment getting very decisive. Did you say you watch the daily but trade off? If I'm trading intraday, and usually I'm trading commodities intraday, Earl, or if I'm trading a stock that's moving around quite a bit, yes, I'll move back to the 10-minute chart. Sean, let me get through a lot of the other charts. That's where we can do that in the chat room tomorrow. Okay, some others that look good right now. UPL, there's your best friend. Gap up above the T line. Probably heading for the 50-day moving average. After the big price swings this week, how do you stay in a trade long enough to make profits or trust that a longer trend is in place? Again, David, that comes right back to what are the charts telling me? And right now, they're telling me that the big sell-off is over, that they're starting to come back into the market. Of all your indicators, which is the most important? The signals themselves. That's the whole. Everything that I do is based upon the candlestick signals, and everything else becomes a confirming indicator. CLF, another bobble. Came up, failed the 50, came back to the T-line area. Now you have a little Dogee gap up. Next target is the 200-day moving average. That was on CLF. And EBIO, The slow stochastics, Jazz. EBIO has good upside potential because we're back down here in the 370 range. It could come back up and test this level, which would be the 200-day moving average, giving you a good 120% upside. So that's another thing that we look at on the charts is there's good charts, but they may be slow movers and maybe only going to move up 4% over the next month. I'd rather find the ones that have the potential of moving up 40% over the next month. How consistent are the candlesticks? Puno, there's only one basic rule on Wall Street. If something doesn't work, it disappears very quickly. Japanese candlesticks have been around for 400 years. And it's not that they've been hidden from anybody. Nobody's ever paid attention to them until about 3 decades ago. So remember, candlesticks is the cumulative knowledge of everybody buying and selling. And the Japanese rice traders that utilize these didn't become wealthy. They became legendarily wealthy in Japan. They were the powerhouse, financial powerhouse for centuries. And they were doing it off the most basic of all trading investments, rice. CLD, nice big fry pan bottom, broke out through the 50. Notice where your stochastics are. When you come out of a fry pan bottom, you're probably already in the overbought condition. Yeah, Kevin, I don't think he does. You have a minimum dollar amount of stock price before buying options? No. Usually I'm buying the stocks that are higher priced. If they're low priced, I'm just buying the stock, so I don't have to worry about the time element. SEDG, there's your big belt hold signal. You can start buying this one with the anticipation your next target is the 50-day moving average. Remember that belt hold tells you they've wiped out quite a bit of sellers, so there's not going to be any sellers in the way. Is the bobble the same as the T-line crunch? No, but they're probably parts of each other. The T-line crunch could be the result of a bobble, or the bobble is the result of a T-line crunch. You don't have to have a T-line crunch to have it be a bobble. Usually a bobble comes up and hits the resistance and pulls back to the T-line, whereas the T-line crunch might just be a steady move right up into that resistance level. Oh, it's probably not you, Scott. I usually do a lot of double talk when I'm on here. I'll try to find a bobble. Q Logic, another slow curve. Look for it to come back up to fill the gap up here at the 50. SQM, I know they're trading this one in the chat room. That's a very good chart. And notice what started the uptrend. You had a big fry pan bottom. Then remember, your belt hold wipes out a lot of the sellers. Now there's no sellers in front. That makes for a stronger upside potential. Adrian, every Monday night we do sessions for members, and we've got people in the rooms that can provide those scans for you. Puno, I don't trade the forex. I trade the commodity or the currencies outright. I have to figure out which way one of them's going, let alone trying to figure out two of them. I'd rather just buy the dollar or sell the dollar, or buy the euro or short the euro. SNMX, nice J-hook pattern. J-hook patterns want a strong move, a pullback, and then the next move is going to be the same magnitude as this move right here. So you can pretty well calculate what your upside potential is. And if it's on a major stock, gives you a good opportunity to put spreads on that will work very effectively. IDTI, good looking chart. Not anything to write home about. YY, that's got a scoop type pattern. Notice how the big flat handle? Now you've got your best friend, Dogee gap up. So more than likely they're going to come up here. If they break through here, you've got that slingshot effect coming out of the scoop pattern, giving you a strong upside. Let's see, somebody said Yahoo did a kicker signal. Not really, no. An SIMO, that's a good breakout of this kind of your belt hold, big spinning top. Look for them to move up to this level. The biggies, Apple, big belt hold, now trading up above the T line. And if it opens positive tomorrow, notice what it did today. It actually came back and used the T line. Now remember, nobody has the T line on their charts. So it came back to a natural level before finding support. If it opens positive tomorrow, what's it telling you? Telling you this downtrending channel is not acting as a resistance. More than likely, you're heading up to the next resistance levels. Bidu, did close just above the T line. Same scenario as Apple. If it opens positive, it's breaking this downward trend channel and telling you it's moving away from the T line after this gap up today. Let's see, we did GMCR. Because of the belt hold. If this gets moving, it could pop pretty quick back up to the 50. Bita, tried to buy some calls in this one, but the calls were too thinly traded. But it also, if it starts trading positive after breaking this downtrending channel with a gap up, tells you you're probably heading for the next resistance level. Yes, the stochastics are 1233 slow. Starbucks, scoop type pattern, it's back up above the T line. Just a very simple rule. If you're above the T line, you stay long. If you go below the T line, you take your profits. Notice where they open this one on the big downdraft day, right smack dab on the 200. Took it down and then brought it back up. You could be buying this one if you like Starbucks as long as it stays above the T line. Uh-oh. And a couple more. Amba. Amba did becomes a weak sister of the biggies. This one's still you don't pay attention to until they can close it up above the T line. FCX, a good looking chart. There's your big morning star signal with the gap up on this side. I'd suspect heading for the 50. MP, no. We're not buying the stock because it's risky or unrisky. We're buying the stock because of what the chart is telling us to do. So if somebody's out there buying the stock, it doesn't matter what the risk factor is or what you perceive the risk factor. I wouldn't short AMBA because your stochastics are coming up. You've hit support levels. I just wouldn't buy it. So there's some that you just don't pay attention to. And a couple more. TCK. That's your kicker signal. Not quite your kicker signal, but a kicker signal is where they open it here and close it here. The next day they gap it up at or above the previous day's open and go the opposite direction. A lot of these small mining stocks are doing very good or reversing. So there's a kind of a Morningstar signal on CN or CNX. You have a minimum daily. Yeah, Bob, I usually try to, it depends on the size of the account. If it's a medium-sized account, I don't want to trade stocks that are, usually I want to trade all my stocks above $5 because of the marginability of them, and usually want at least a minimum of 200,000 shares traded each day. That takes your universe down from 8,700 down to about 2,700. And out of 2,700, I can find 3, 5, 7, 10, 12 stocks each day that are have good charts to them. Okay, all right. All right, are there any general questions on candlesticks? Oh, John, usually I'm trading, usually that first hour. Usually I'm trading stocks from 9:30 to 10:30 or so. But usually around 10 o'clock, a lot of the commodities are opening up, so I'll trade those mid part of the day. And then I'll trade some stocks in that final hour. A belt hold. A belt hold is when they gap a price way below the trading range and then bring it back up into the trading range. The Japanese rice traders explain it as two sumo wrestlers wrestling. One's trying to back out of the ring. They grab his belt and pull him back in. And then they're back to wrestling again. I don't trade pre-market because that's not what the big boys are doing. That's just little volume here and there. Let's see, what is the best way to trade a Dogee sandwich setup? If you buy and sell at the end of the day, do you wait to see the open? If I see a Dogee setup or a big day and then a Dogee, if it opens positive the next day and start seeing it trade positive, I'll start buying because I know the probabilities are pretty strong it's going to have that same type of up day. And that's kind of what I did on GMCR. Is yesterday it opened positive, but immediately started selling off, and then came back up and did a Dogee. Today we could see that the market, the futures and the market were opening positive, and this was opening positive, so we were buying on the open today. You put in a hard stop when you put on a trade. If I'm sitting here, no. I know what my mental stop is, and I'll just hit it. But if I was getting up and going to lunch and the market was wobbling around, yeah, I'll put in hard stops. Is the bobble described in any of your books or recently added? I don't know if it's described. It's probably not described as a bobble. I'll try to find a bobble as we go through here. But a bobble isn't anything difficult. You see it hit a resistance level and it pulls back to the T-line, but the T-line can't close below the T-line. Thank you, Martin. That's because when I was trying to learn to trade, there was nobody around to talk to get insights. Even as a stockbroker, there wasn't people that you could go to say, how do you trade? Sarah, I'm not following the stocks. I'm just analyzing them. I usually I usually put out 2 or 3 stock picks a day, and some of those will activate or execute. Some of them won't. So it's basically all we're doing right now is just analyzing what everybody wants to look for good positions. MP, no, it's still, if a stock drops below the T-line during the day, simple rule, it needs to close below the T-line. Now, if it dropped below the T-line and started trading below the previous day's open, and I was in the overbought condition, stochastics in the overbought area, that's when I'd close out the position. Jeffrey, there's no criteria of how far away. It's a spot that tells me that if it came back through this level, that's negating the signals or negating an uptrend or negating the downtrend. That was kind of the conversation that I was having today about crude oil prices. Because here was the bullish Harame. Today was an up day that kind of confirmed the bullish Harame right here, telling us the selling had stopped. So now it's even trading up some more after hours. So if I was trading it, notice what type of pattern it was doing on the 10-minute chart. There's that slow curve, fry pan bottom, break out to the upside. So crude oil is still in the uptrend. So if you didn't catch crude oil per se, you can get ready to buy UTWI tomorrow, because that's a leverage way to do it. Or you get ready to, we're still looking at whiting as a long-term pick because of all its reserves up there in the Balkan field in North Dakota. And it's starting to show us it's time to start buying this one. And how long do we hold it? Right now, on a short-term basis, as long as it doesn't close back below the T-line. I don't use the 34. It just isn't as effective, or it doesn't show up as very often in the trading. All right, Jim, go ahead and do the double line. I don't trade the forex just because it's too difficult, and I don't want to be up at 3 o'clock in the morning trading. I can trade the dollar every day. Jim, do the second double line. It's much easier to follow one stock movement. I've made tons of money just trading one stock, no matter what DB says. All right. All right, I'll try to do as many as I can. We've already got people overtime tonight. CLR, you can buy this one on positive trading. You had that Dogee gap up today, and you're right at the T-line. PAYC, another one you can buy on positive trading. It has to open positive tomorrow. If it opens lower and starts trading back below the T-line, you don't want to be in it. You're in a sideways mode. Google L, kind of the weak sister of all the biggies, but it closed back up above the T-line, so you can stay stay long on this one. The Qs, just like the NASDAQ, closed up above the T-line. Use the T-line as your stop. It shouldn't close back below that level. If it does, it tells us we're back in our whipsaw mode. Gold Trust. Gold tried to bottom out today, doing a doji. Now you have to see bullish confirmation to tell you that it's starting its uptrend. Yes, you can buy oil. Oil is that as leveraged? It doesn't look like it's leveraged as what was it, UV, the XY. Goldman Sachs, another one that closed right on the T-line after a doji gap up, needs to open positive to tell you they've broken through the resistance level. JDST, not a sell signal, but not a great situation. If you are long, it has to open positive to stay in it. And ACAD used the T-line and the 200 as support today. If I was buying this, I'd put my buy stop at today's open. If it came back up through there, it's kind of breaking through this level and telling me the bulls are still in control. UHS, another one that has a scoop type pattern. If it opens positive, breaking through the 50, you can be buying it. Monster, nothing yet. Needs to see, it's telling us it's probably supporting at the 200, but they aren't buying it yet. If I was short, I'd be ready to cover on a positive open. I wouldn't be going long, though, until it does close up above the T-line. VIMC, Dogee gap up, another one you can buy on positive trading coming up through the moving averages. ACI we did. That's the one you want to stay long as it stays above the T line. But notice where you are. You're starting to move away from the T line. If I was long, I'd be going to my 10-minute chart if this opened positive tomorrow. The Russell 2000 just closed just at the T line, has to open positive tomorrow. Visa, another one that can be traded positive. It's not a very exciting moving stock. But it's moving in the right direction again. Sony, nothing here yet. You've got the potential buy signal, but you're close enough to the T line. Notice how this close, you're still using the T line as resistance. This is close enough for me to say I'd rather pay for it after it comes up through the T line versus trying to anticipate that. Monsanto had a big day yesterday and then opened positive. So if you were short, it should have been covered with it opening positive today. It needed to open lower. And now this is a Dogee sandwich setup. Yes, you've had your big up day, a Dogee. If it opens positive, where's your next likely target? Well, if the same magnitude move as this puts you up almost straight to the 50-day moving average. Mobley, kind of a flutter kicker. You can buy this one on positive trading. Just use the T line as your stop. Valero hasn't been able to get out of the woods yet. I probably wouldn't be long. Valero, it'd be hard to stay short with it supporting here. I probably wouldn't be long or short in Valero. The 20-year notes still heading down. Probably going to the 50-day moving average, which means interest rates are still moving up a little bit, but not any great magnitude. Tazar, you stay long on this one. The Dogee gap ups are telling you that they're trying to get into this one with great enthusiasm, which means there's more upside. AQXP, nothing here. You're sideways. I'd be trading something else. Is this the Russia fund? Russia bear fund, it means they're moving up, right? So you stay short on this until you see a buy signal. Weight Watchers. Let's make this big enough where we can see it. Weight Watchers, you can get ready to buy. If this opens positive, you have a potential of a Dogee sandwich, which gets you right up to this resistance level. So you can be buying this one. Just make sure it gets through that resistance level. An RPRX, Morningstar type signal. Notice the hammers down here. So again, close enough to the T line that I'd rather buy it once it came back up through the T line. And again, notice where this is occurring, right about the same place it bottomed here and where it bottomed here. An MDRX, nothing real exciting here, not a real reversal signal of any great magnitude, which means there's too many other charts out there that have good reversal signals to them. I'd rather go to them versus trading that one. DHI, that one's got a bullish Harami gap up. This one you can buy on positive trading. We did the Russell fold. Just closed up above the T line after gapping up. I'd buy on strength. Just want to make sure it gets through the 50. I'd watch to see if they can get through the 50 pretty quick. Just, that's the bear fund, which means we've had a day where the gold is kind of stabilized, maybe making the mining stocks go back up. AK Steel, another one you can be buying with the anticipation that it's coming up at least to the 50 and then see if it can break out through that area. Whoops. Monster, nothing here yet. It's trying to support on the 200. If you're buying it on positive trading tomorrow, Just watch to see what it does once it gets to the T line. It has to get through that level. Mankind, bullish Harami, gap up. You can buy this one. Next target is potentially the 50-day moving average. ALDW, big long-legged Dogee on the big day. I'd be a buyer of this one, especially if they break through. If I was going to buy this, I'd put a buy stop just above today's high or just above the $26 area. Tell me it's broken out. IMUS, you can buy this one on positive trading. Just make sure your volume is good. Netflix, positive trading, especially going into the close. You can stay long on this one. And GLD, that's gold trying to base in here, so it might be setting up for a J-hook pattern. Amazon was up strong today. Another scoop type pattern. You can be buying this one on positive trading using the T-line as your stop. IBM coming back up. It's just not a very exciting trader. Closed right on the T-line as a Dogee. So if it opens positive, you can be buying it. Again, just use the T-line as your stop. Alessandra, these I think are free, or they might charge $10 to come in just to take care of the room cost. I'll have the locations here pretty soon, but they're basically free. I'm just going over there to do presentations for Metastock. Washington, I think, is on the 20th. I'm sorry, on the 19th, and then Philadelphia was on the 20th, and we had to move it from the 27th because I think the Pope was in Philadelphia on the 27th, and they didn't want me to cause major traffic jams for the Pope. Hey, you can buy this one on positive trading. All these are popping, so you just have to watch to make sure that they stay above the T-line. HOTR, you can buy this one. Hopefully the volume is good for a $2 stock. Oops, where did we go here? INDL, still have to wait for this one to get back up above the T-line. That's the Indian market, all right. EZA, JM, I don't know. I don't know what Park City is. I think they're trying to get me out on the West Coast again. I just hate flying in a plane that long. TZA, right now you can stay short until you see a buy signal. Anticipate coming back to the 200-day moving average. Cyber still hasn't been able to get above the T-line. I wouldn't play with this one until you see a strong buy signal and a close above the T-line. Twitter, you can be buying this one. That one's setting up nicely. Southwest still has to get above the T-line. Wouldn't be buying this one until it does. If you're short, you can stay short until you see a close above the T-line. GDX trying to pop back up a little bit because gold is stabilizing. And the juniors, same scenario. It's a pop because you don't have a reversal yet, so watch to see what it does once it does get to the T-line. DSLV. Oh, that's a toughie to trade. That's the inverse for silver. Let's see what silver has been doing. Had a bullish harami today. Doesn't look like a good trading chart right now. Let's see. Did we do Tesla? Tesla came back up above the T line. I would suspect it's going to come back up at least to test the 50. HRTX, slow curve. You can be buying this one on positive trading. I'd rather pay 36.50 knowing that it broke out through the top. And Nugget is just trying to stabilize right now. And it's trying to stabilize the same areas that it kind of bottomed out before. It still needs to get back up above the T line. And TECL, this one you can buy. It closed above the T line. SWKS, another one you can buy. After that big belt hold type signal, bullish engulfing. Next target, if it breaks out through this level, is the 50-day moving average. NXPI, this one has to, didn't come back strong after bouncing off the T-line, but you can buy this one on positive trading. FCX we did, that's a good looking chart. You can buy this one on positive trading. Ford Rubber, you can buy this one on a positive open. There's your Dogee sandwich potential setup. John, I can't get the E-minis over here for some reason. I used to trade the E-minis all the time. EMC, another one you can buy, just not a very exciting stock. It doesn't move around. CNX, series of Dogees, yes. Lots of indecision, and now they've told you what their decision is. That's your kicker type signal. I suspect they could bring this one up pretty strong. Okay. Was DB a her? Ron, there's 3 books. Profitable Candlestick Trading, High Profit Candlestick Patterns, and Candlestick Profits, Eliminating Your Emotions. And that's basically what candlesticks have done for me, is kept my emotions out of my trading. All right. Oh, Stan, if you were going to get one of the books, I'd get High Profit Candlestick Patterns. That's got the meat in it. Let's see, Disney. Disney, you can buy this one again. Not a real dynamic mover, but it looks like they're bringing it back up again. FXC, you can stay short, but logic says if this closes back up above the T line, you want to close it out, your short position. British Petroleum, okay, that's a kicker signal. Notice where it opened here and closed here. Then they gapped it up above the previous day's open and went that direction. That's a strong reversal. And silver, get a little pop back up. And silver wheaten, whoops, trying to pop up a little bit also. What is the S or the ticker? Oh, just showing that it's a stock. That's how they do it on CQG. IBN, Nothing here yet. If yeah, it still has to get back up above the T line. Not a good chart. Probably wouldn't be long or short this one. And HDB, another one that I wouldn't be long. If I was short, I'd stay short, but I wouldn't be going after this one right now. We did Nugget, TECL. This one you can buy as long as it trades positive. We did Mankind, Newmont. You get ready to buy this one. It did a bullish engulfing signal, about the same level, bottomed out before, so want to be looking for that double bottom, but it needs to close above the T line. How about the stock index future? I don't know whether I can get it on here. Future.tf. That's the Russell Mini. Sorry, Dennis. The VIX. That's a whipsawy. Oh, let's see. That's the one that you can see what the 10-minute chart looks like. You can still trade it off the 10-minute chart. That's the little morning star signal on the close. But remember, the 10-minute chart today doesn't mean anything for tomorrow morning, because the investor sentiment could be completely different in 12 hours from now. SYGR, bullish. Now you want to make sure it can get up through the 50. EXPR, back in fill today, but I would suspect after that big kicker that big kicker move to the upside, look for a 45 degree, which would be somewhat what that trend was doing prior to this. Thank you, Punel. I've been doing it. It's getting close to 40 years now. Doesn't seem that long. I'm hardly 40 myself. How long would you hold positions when you're trading the T-line from a 60-minute or 15-minute chart? What is your typical hold? Oh, Jim, I don't know. The question is backwards. What is the time frame that you want to be trading? And then what are the best charts to coincide with that? So if you're trading short-term swing trades where you're lasting a day, day and a half, maybe you're using the 15-minute and the 16-minute. If you're a swing trader, you might use the hour or the 60-minute and the daily and the weekly. ExxonMobil, another one you can be buying, just not a very exciting price mover, but it's heading in the right direction. And Cisco hasn't gotten above the T-line yet. Need to wait for it to do that. Slumberger, pop back up. You probably have if you're buying this one on positive trading tomorrow, obviously you have to wait to see what it does when it gets to the 50. I'm sorry, to the T line. Next, NXPI, I just suspect going for the 200 or the 50. EMC, same scenario, just not a very fast-moving stock. Go hasn't been in the limelight for a while. Nothing here yet. You're still in a downtrend until you see a buy signal and a close up above the T line. Soybeans were trying to pop up today, but not anything that I'd be trading right now. Not a reversal signal, still in a downtrend. I'm still looking at wheat to go short. If it a very simple place to put a stop right now that it's trading up after hours is at today's or at the after hours open or today's close. It comes down through there. This slow curve pattern is in progress. Yeah, John, I can't get the E-minis. Let's see, we did Starbucks. Guild needs to open positive and trade positive to get into it. Oh, Jim, that's all again on each individual. Hold on for a second. My hand is on. Okay, sorry about that. Yeah, again, Jim, that's all based on the time frame that you want to be trading. Yeah, there's nothing in candlesticks that tells you what time frame you have to trade. You do it the other way. Whatever time frame you like to trade, then you can use the corresponding charts to effectively trade during that time frame. AWH, nothing here yet. You might be bottoming, but you still have to see it close back up above the T line. So there's nothing nothing here to tell you that you want to be in it just yet. Uh-oh. SENY. What about S? Yep, that one's not coming up. ADI. You could be buying this one. Doesn't have a real major reversal signal, so I would suspect that it would only come up to the 200 before running into resistance. JD.com, that one I'd be more apt to be buying on positive trading tomorrow. The December cattle, yeah, I went long on these today, and I think I am still long 6 or 8 contracts, but I'll need to see it open tomorrow positive, meaning heading for the T-line. Whirlpool, nothing here. I wouldn't be long or short this one. Just nothing there to get excited about. Thank you, Dave. Yes, we have all the, we don't have to have a scanner. Whatever scanning software you use, NK, you can put the formulas in. It's not a difficult process. And if you need the formulas, we got people like Ed C in the chat room that can send you the, where you just copy and paste the formula and put it in whatever scanning software you're using. Alcoa finally has done a little Dogee gap up. So if you're buying this one, it needs to stay above the T line at this point. It could be, yes. BP is one of the, but it's, yeah, if it's an ADS, trades over there. You always make buying decisions from the 15-minute chart at the end of the day? No, never. I just usually, very rarely am I making a buying decision at the end of the day. I'd rather see it open positive the next day. Usually you're going to be seeing your buy signals going into the close, but you need to see it confirmed at the end of the day. I'm not getting SENY there. And Monsanto, we did. If you were short, it should have been closed out today. How do you join the trading room? Is it a large amount up front or a monthly? It's monthly. It's like $97 a month. Or you can buy quarterly for cheaper and semi-annual and annual. ALV, and part of that, part of the membership is that usually on Monday nights we do the same type of session just for members. We do it for everybody on Thursday night, and then usually on Tuesday and Wednesday nights we try to do a session like entry and exit strategies, stop losses, scanning, option trading, which trades make the best spreads, that type of thing. So you get a lot of education during the week as well. ALV, little scoop pattern, and you can buy this if it does open positive tomorrow, because it's going to move in the direction of how they open it after a Dogee. TWX, Time Warner, Nothing here to get excited about just yet. Needs to get above the T-line. Okay, it's way past everybody's bedtime. We're at 10 o'clock. All right, I'm going to do 4 more. How's that? And we'll call it a night. Stay short on ERY. Let us sell some more here. Leaf. Leaf, you can get ready to buy this one on positive trading using the T-line as your stop. Now, on big moves like we've seen in some of these today, it's not unusual to see them pull back right to the T-line and then start back up again. So if you're aggressive, if you see something pull back to a T-line after a buy signal, look to your 10-minute chart. If the 10-minute chart is starting to show buying and coming back up above the T-line, that's where you can start buying a pullback. HZNP, that's kind of your little flutter kicker. This one you can buy on positive trading tomorrow. That's a good one. All right. It's midday in Australia. Oh, no wonder you're not even tired. ZS, yes. All you have to do, the options room is a separate room. It's more conversations of option strategies in there. So it's a different service. So there's another fee, and the reason we don't promote it is we're not trying to put out a bunch of things where we can charge everybody, but everybody wanted that. People in the main chat room didn't want to hear option strategies if they're just learning candlesticks. So it's for the people that want to trade options. We got quite a few good traders in there that come up with good strategies. Oh, the presentation in Washington, D.C., I think I talked for 2 hours. Okay. All right. With that, everybody have a good evening. To get in the options room, email Abraham at candlestickforum.com. He'll give you all that information. I think I can type it in here. Try that. Oh, and the joke I told in the chat room today, which was Sandy's joke that she wanted me to tell everybody, is why do mermaids wear seashells? Because bee shells are too small. So with that, everybody have a good evening. We will see you bright and early in the chat rooms tomorrow.